Well, there are increasing questions about China's promise to buy more U.S. agricultural products with that $40 to $50 billion range worth of farm products will be significantly more than China has ever spent in 1 year. The Wall Street Journal reports Beijing may use the farm goods as leverage to urge U.S. negotiators to roll back plans for new tariffs in December. But President Trump doubled down on China's reported commitment while speaking to reporters earlier today.
There have been some reports that China is not buying until the deal is signed. No, China started buying already from the farmers. It'll be anywhere from 40 to 50 billion, which is far more than anybody thought or expected. It's a great deal for the farmers. I think the farmers will come out, along with many other industries, something that's already taken effect, even though the deal won't be signed, probably until I meet with President Xi in Chile.
Joining us now is Anthony Saccaro. He is the chief financial president of Providence Financial. Anthony, it's kind of been all question marks since we saw that announcement from the White House on Friday. Now we're hearing that maybe the Chinese didn't actually see the same agreement or didn't actually understand it to be the same agreement that was announced on Friday. What do you make of this back and forth that has come out since?
Well, the key to the last clip that you just played with Trump is the fact that the agreement will be signed. It has not been signed as of yet. And there are so many questions about this agreement at this point. There's a lot of people that are doubting whether the agreement is something that's even realistic. I think the largest amount of ag goods that China has ever bought before is slightly over 20 billion. Trump's talking about 40 to 50 billion. So the numbers don't seem to add up. But Trump's a negotiator, and as a negotiator, or I should say, as an attorney, knowing a little about something about a negotiation, I'm wondering if he's put the level high so that, in fact, he can wind up lowering it later and still get what he wants, even though it's not that 40 or 50 billion. You don't start a negotiation at what you want to get. You start much higher, and I think that may be what's happening here.
You could argue that in any negotiation, there is an issue of trust as well. And as we've seen play out between these two countries and these two leaders, there is a lack of trust given the back and forth that has played out over more than a year. How do you think the market interprets the headlines that are coming out?
Well, I think the Chinese negotiation and the tariffs and everything else is a huge factor when it comes to the market. The reality is that trust, you're right, is absolutely critical, and the markets are just going to take it day by day. The markets like the fact that last week we came to a partial agreement. At least that's how they took it. I don't know that we came to any agreement at all. China wants to kick the can down the road. I think last week's negotiation and the fact that they haven't signed anything yet is actually a big win for China, for Xi Jinping. So I think the fact that the markets like that, Trump was able or willing to forego the tariffs this week, but in December, who knows what happens. If the tariffs are on, the markets probably aren't going to like it.
Meantime, we've got finance ministers as well as central bankers meeting over in Washington, D.C. for the IMF World Bank meeting. And on that front, we did hear from India's finance minister, Nirmala Sitharaman, who I spoke to yesterday. She warned about a repeat of the 2008 financial crisis in the face of a global economic slowdown. And I want to read to you what specifically she said, because I think it is quite telling. She said, I think the intensity is being felt across the board now. And she's talking about the slowdown. It's a lot more than how it felt in 2008. What probably is not available now that was available in 2008 was this greater sense of collectively everyone wanting to respond to it from their respective quarters. So essentially what she's saying here is, look, even if what played out in 2008 is being repeated, things could get much worse because all the governments are not aligned right now in terms of how to respond to that. What's your response?
Oh, I agree with her 100%. We've had a very strong economy globally for the last, decade or so. If you look at Australia, they've had a hugely strong economy for the last 20 years or so, and now they're talking about negative interest rates. So I agree with her assessment. I agree that if we're not careful, we could have another 2008-like scenario. The governments are trying to be proactive, and I think they're doing a decent job. Even our own government lowered rates twice in the last 60 days, not because there's a reason to lower rates, not because they're trying to stimulate the economy, but because they're trying to be proactive and stave off any recession that's potentially coming. And a lot of the other governments are doing the same thing. So I like the proactiveness, but I think you can only push it off for so long. At some point in time, there's got to be a major correction. We just hope it's shallow and doesn't last too long.
Well, there's also questions about whether central banks as a whole, given the low rates, have enough levers to pull in the case of any kind of financial crisis. The Fed's latest beige book did come out a few moments ago, and it said the economy is expanding at a, quote, slight to modest pace since early September. What does this tell you about the health of the U.S. economy?
Well, the U.S. economy, I mean, it's no secret that it's been, a lot slower than we'd like to see it, right? The fact is that part of the reason why the Federal Reserve hasn't raised interest rates is because they can't get that darned inflation factor above 2%. I think there were only 2 quarters recently that actually went above that amount. So everything is plodding along. It is slowing down. And right now, part of my concern is that the U.S. economy, as a lot of my friends have said on various networks, it's really the cleanest dirty shirt in the laundry basket. There's really nowhere else to go. And I think that's why the U.S. economy is looking a little better than all the other economies. But at some point in time, I think that's not going to keep going. At some point in time, the economy is going to slow even more. And when the stock market realizes that, it's probably not going to be happy at that point.
Yeah, and on that front, we did get a growth outlook from the IMF yesterday. They cut it down given sort of the U.S.-China trade tensions as well. I'm wondering, when you talk about the overall slowdown that we're seeing, how much of that and the uncertainty can actually be removed by a phase 1 or phase 2 type deal between the U.S. and the Chinese?
I think that's a great question. And I think a lot of it can be removed momentarily by the deal or any deal that Trump puts into play. Trump holds the keys to the kingdom. He's got the cards in his hand. If the economy starts to falter and the stock market starts to falter, the reality is he can pull out his cards at that point and play them and get the economy to come back or get the stock market to come back. His entire election is going to be based on the economy, and he's going to control the economy between now and then. So you've got this battle, this balancing act of the slowdown in the global economy that's weighing down the market, or at least keeping it from growing as much as it could. But then that's balanced out by the presidential election year and the fact that Trump controls the cards. So I think that it all comes into play. I think this next year is going to be flat. I don't think we have a lot of upside potential. I don't think we have a lot of downside potential. But after the election, anyone's fair. It's fair game. Who knows what's going to happen? I'm not excited about it, though.
Yeah, that points to the increasing mix that we see between economic policy and politics as well. Anthony Saccaro, appreciate your time today.
Thank you, Aikiko. Appreciate it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.